we think it's a prudent strategy. Of course, we're not suggesting that investors throw all their money into EM high yield or Asian high yield, which is a subset of EM high yield. The reason why we have taken that position, overweight on EM high yield, is because interest rates are very low. They are expected to stay low for the next 4 to 5 years, very low. The Fed has indicated that. And given that sort of an environment, I think investors are in search of better yield. And EM high yield, currently the spreads for EM high yield are attractive relative to developed market high yield bonds. And so we think there's a space for EM high yield in investors' portfolio. And we think, of course, it carries risk. But looking at the default rates for EM high yield and Asian high yield, they have not come to levels that are alarming at this juncture. We still think that the risk is manageable.
But most of Asian high yield is essentially the property market in China, and we know what's happening there with the Evergrande case. The risk, skepticism, circumspection about the future of that segment is really hanging in balance. And so how are you approaching the downside that there could be to this trade?
Well, I think the bottom line is this. We are telling clients, we were actually positive on Chinese property. And what we're saying is, of course, it's a question of what you pick. It's important to look at the granular details, look at the individual companies' fundamentals. Some of them are running into headwinds and have trouble. Those companies you want to avoid. But, essentially, it's about looking at the details and, stock picking, or rather bond picking very carefully. So looking at the credit matrix. But overall, I think the Chinese property market doesn't look like it's going to crash. The government appears to be quite determined to provide some degree of support. And they have the means. They can cut interest rates, inject liquidity, undertake fiscal support. So the government in China is a centrally commanded government ready to act if necessary, and that provides some degree of comfort.
What about equities across the region? Where do you hold your bias within equities?
Within equities, Asia, we are neutral overall. But within Asia, we are overweight on China, we are overweight on Hong Kong, and we are overweight on Singapore. And these are the three regions, partly because, of valuations. We think that the valuations are, more attractive on a relative basis. In the case of Singapore, we're also positive because there are a lot of high yield opportunities in Singapore. You've got a huge real estate investment trust segment in Singapore. You've got a lot of blue chips that offer good yield. And so Singapore is a yield story. And on that basis, Singapore will continue to gain traction. And with China and Hong Kong, I think the data will continue to improve, and that will augur well for China.